All right, y'all, back to work. FOMC is behind us. Big corporate earnings are behind us as well. And boy, too bad. That breakout pullback we talked about on last night's video, it set up right into the FOMC this afternoon. That was a bit of a bummer this afternoon. The good news, though, is this. The earnings we saw this afternoon, they left us with some what are kind of nasty, choppy ranges this afternoon. Now, some people might not like that, but if you know my style of trading, I love ranged markets. I think these ranges make our job very easy for tomorrow. The way things are setting up right now, it looks like bear traps are probably where the money is made tomorrow. We're going to cover some variations of bear traps. Bear traps come in lots of shapes and sizes, so not to worry. By the time we're done tonight's video, I'm going to make sure you have a roadmap, a game plan to make some money tomorrow as well. So charts are ready to go. Enough of the intro. It's been a really darn good week so far. Let's go find some more winning trades for tomorrow. Charts are ready to go tonight. You can see S&P and SPY is all ready. Oh, the Nasdaq, the triple Qs are all ready. I have three very important clues that are tipping me off to where I think the winning trades are waiting for tomorrow. One of those three clues is right here on these hourly time frames. I like to use the hourly charts as an overall directional filter. And it's very easy to see right now the buyers have control of the short-term momentum, or I guess medium-term momentum on the S&P and SPY. Momentum on the Nasdaq and triple Qs is also very bullish. We did have that strong move down to begin the week this week, right? But the buyers have got some good separation off that moving average right now. I'm pretty confident these buyers, at least for now, have control of the higher time frame momentum. Now, that will give us a directional filter for tomorrow. But I'll tell you, though, this is not going to help us time the entries for tomorrow. I have two probably more important clues on some faster time frames, some tick charts, help us time the entries for tomorrow. We're going to cover that in a few moments. Before we do that, though, let's check schedule for tomorrow, because there's three things on my mind into what should be a very busy Thursday morning. First things first is we will hear from the ECB tomorrow morning in the pre-market. So just be aware of that. They'll probably shake things up. The ECB might cut rates tomorrow morning. Of course, we saw the FOMC announcement this afternoon. They're very adamant right now. They have to see more progress on inflation before we cut rates here in the US. The ECB hasn't had such a problem with kind of sticky inflation, so they may cut rates at the ECB tomorrow. Nonetheless, though, expect some volatility around the press conference tomorrow. 8 o'clock, 8:15, 8:30 Eastern time tomorrow morning. Second thing on my mind for tomorrow is the GDP report. 8:30 Eastern time, that definitely is a big number on my radar tomorrow. And the third thing on my mind is not until the close tomorrow afternoon. We have another big Mag 7 tech stock reporting tomorrow. A little company you may or may not have heard before, right? Apple, of course, all joking aside, is reporting tomorrow after the close as well. So as always, whenever we have big news late in the day, be careful trading late in the session, right? So it'll be as early as possible tomorrow morning in our trade room. But let's get back to our charts, though, because it's good to know the ECB, the GDP, and of course the earnings, but we know the money is made on the charts in front of us. I mentioned earlier, I like to use the hourly chart to give me the overall directional filter. Look at the size of that big bull market right there. It takes a lot more than that little shot lower to change this to being a bear trend. So we're definitely bullish overall on the hourly, but I think where the money is made right now, though, is on these tick charts. Tick charts are based on volume. One tick is one transaction. In my opinion, this, by the way, is a 7,000 tick chart. All the time frames you'll need in the upper left-hand corner. Tick charts make pattern recognition so much easier. And by the way, if you're watching for the first time right now, that is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week. There are two really significant clues here on the tick charts. One of them came 24 hours ago with that very strong move higher we saw, right? 24 hours ago, right? Yesterday's trading session. Now, why is that strong move higher? Why is that really important? Well, because strong moves love to retest. So my trade room, we call this unfinished business. There's unfinished business right now on both the S&P and the Nasdaq. We'll see that in a moment here. But that 61.11 half level, anytime we see a strong move in one direction, a pullback and a retest of that high, that gives the buyers a lot of again, unfinished business to accomplish tomorrow into the end of the week. But then we have what might be the most important clue, and my favorite part of the entire analysis here tonight is a bearish trading range. Now, why is a bear range a big clue? Well, two reasons. One, ranges act like magnets, and most importantly, they love to rotate, right? They love to rotate. And we use things like megaphones or expanding triangles. We use things like pendulum swings, the amount below, the amount above. The most important thing about this range is put this all together. We're bullish overall on the hourly. We have unfinished business up around that 61.11 half, and this range is going to want to rotate back and forth. Now, in all reality, if you look closely at this chart right now, you'll notice what the rotation is doing right now. The rotation's gone off the high, off the low, and we're now rotating back higher. Now, I have 3, maybe 4 breakout trades I want to talk about on this video because, again, we have unfinished business there at that 61.11 half. We'll talk about those breakout trades a bit later, but I'll tell you right now, if the trading gods are watching my videos here tonight, what I hope we get is a bear trap down here. Because think about this, if this range is a magnet and we have unfinished business overhead, this is a horrible spot to be selling and a great spot for a bear trap. Now, when I say bear traps come in lots of shapes and sizes. For example, the most common kind of variation of bear traps, if we run lower, this is the last place you want to sell, not in an overall bull market. We saw earlier on the hourly. So one of my favorite trades in our trade room is to wait for a pullback because, I'm not going to pick a bottom on this. I can't blindly buy down there. It may keep going a bit further. What I do know, though, is once those bears come back and they try twice, once they try to short once and try twice, now I know where their pain is, right? Now I know where sellers are forced to become buyers. A very simple way to use what I call a failure pattern. 1 try, 2 try, it's basically a bear trap. I want to buy into those stops because if you get stopped out as a seller, the only way out of it is to buy your way out. Now, the easiest way to make more money in trading is to add to your winners. Where does the market want to go right now? It wants to rotate back to the other side of that range. My favorite way to add to a winner is to look for this pattern. This is what is technically known as a bear trap pattern. It's a separation off the moving average, a higher high in price, and I want to get right below that low. In my trade room, we call these failure into pullback or failure into trap combinations. I love that bear trap setup below that low. But let's talk about a couple of variations of this because I would love to trap in bears down here. But you know what? This might be so obvious, this bear range in an overall bull market. I may not get that bear trap down there. Oftentimes what happens is we get going lower, but there's so many buyers here, it just gets smoked, right? And just whoops right back up into that trading range. These can be a bit disappointing and frustrating, but I'll tell you right now, most of the time, when they V-bottom off these lows, they're going to start grinding going higher. Now, that voice in your head is going to tell you to chase after this. Do not chase after that V bottom. Do this instead. Mark a trend line off the highs. Bring that trend line down off that low. Now, look left. Find some of these prior swing lows, and what you want is one of them that lines up around the low of that channel. I'm telling you right now, when used correctly in these scenarios, these are almost guaranteed winners. And this, of course, could be a bear trap, like I'm showing you here. It could be a failure pattern, like I teach in the free video classes. The most important thing is it needs to be that first test off the low of that channel. So if I don't get that failure pattern down there, I'm going to grab that V bottom reversal. That first test is the best test off of that low. Now, I have a few more variations of bear traps I want to go over, because we may not get that run going low. We may wind up running higher overnight. I have a lot more I want to share here on this video. But first though, let's slow down for a second, because I know if you're watching right now, this might be a brand new strategy for you. This might be a brand new language and way over your head. Don't you worry. I teach my entire trading strategy. In fact, I have a ton of examples of traps, failures, V bottoms, right? It's all included more. I have so much more I want to teach you and share with you in my free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there. Take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be that day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is it is 110% free for you. And keep in mind too, guys, I'm going to put all the important links you'll need to learn more about this strategy. I'll put all on the description of the YouTube video. Start first with the free video class. Most people start making money all on their own just with the video class I teach for free on the website. And also be aware too, if you're on Twitter or X, I post a ton of videos and chart updates and psychology stuff on Twitter X during the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to follow along and learn more and hopefully earn a lot more. I'll drop the links there for you in the description of the YouTube video. So where did we leave off? Yes, we're talking about bear traps below that low. And again, in a moment, I'm going to cover if we go higher here, because the Nasdaq might be a little more poised for that run going higher. In the meantime, though, I mentioned earlier, I would love to get that run down, trap those bears in. We oftentimes will get a beautiful bear trap down here. We'll squeeze those stops. I always use a 1-to-1 first target, stop moves up to point of entry. I teach those details inside that free video class. But you know what happens sometimes? Sometimes that breakout going lower is so strong that we'll get a nice winning trade on that failure, but it won't make the full rotation. It will run lower and take out that low. When that happens, it's very important to remember this is not a reversal. Remember, that hourly chart, it will take a lot more than another leg lower to flip this to being a bear market. In my experience, anybody who sells short on that pullback, they become buyers as they take their profit targets at that low. This becomes a horrible spot to be a seller because everyone's buying, right? All the sellers up here, they become buyers down here. So again, this is a great place for another bear trap. Now, if you're a student of mine in the trade room, you know these retest trades are one of my favorites because these are oftentimes the ones that really rip in the opposite direction. Now, I mentioned earlier, right, that bear trap. So if we start pulling back here now, and I start seeing those bears come in trying once, trying twice. Remember, I don't pick tops and bottoms. It's markets are not consistent enough to do that, right? Use stops, run stops, trapping those bears with that failure. And remember, especially on a double bottom retest with a range above us, overall bullish on the hourly chart, this is one of those trades where you need to be ready to add more on this winner because you know how ranges work now. They love to rotate. So again, these double bottom retests, do not confuse these with a reversal, right? These are a gift from the trading gods with a nice easy bear trap off of that low. Now, those are some variations I look for bear traps below that trading range. Let's talk about now, what if we don't get it, right? What if we don't get it? You know, for example, what if we try to run lower? You know, for example, I can take that line off overhead, bring it down there. We may only get this bull channel holding, and we may wind up rolling and then running up from there. The Nasdaq will give you a much better look at this here in a moment. How could I buy that shallow pullback? How could I buy that area, right? Well, remember, whenever I'm buying relatively high, we always look for those technical bull traps. So if all we get is kind of a half-baked move going down, and then we start ripping higher, I want to get in as low as I possibly can. And to do that, it's always going to be this pattern right here, right? This pattern. Trust me, guys, once you learn this entry, you will see these setting up everywhere on your charts. Now remember, the trick to this pattern is you want to get that separation off the moving average, right? That's the real key, because separation equals strength. So once we see it pop above the moving average, get a higher high in price, and that pullback right there, it barely misses that moving average, right? Goes down, pops up, like this. Very, very common to see something like that, right? Where it barely misses that moving average. Now, we know how ranges work. We know they rotate back and forth. We know we're overall bullish. That's what gives us the confidence now to jump in on what is technically, right? Again, technically, I say technically because a failure down here is a variation of a bear trap. And again, I call those failures, right? The one in the middle here is a technical bear trap. You'll learn all about that stuff inside our free video classes. So those are 3, 4 bear traps I'm watching if we go lower first. But now, what if this thing rips going higher? We have unfinished business there up at 61.11 half on the S&P. Let's grab the Nasdaq right now, because the Nasdaq is a little bit different than the S&P here. Before we dive into the Nasdaq chart though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing, because YouTube rewards me every time you like and share and subscribe. I know we're all busy people these days, and I really appreciate you guys carving out a few minutes with me every evening here on these videos. So thank you so much, all the likes, subscribes, and all the ongoing support. Now, let's dive in and talk about the Nasdaq. As I mentioned before, right, we're pretty bullish overall on the 60. As I've been saying all week this week, a big move down like that is not enough to cause us to become a bear market. Now, if they hold this and keep going, okay, that's a different story. But right now, though, we're still very bullish here on the hourly chart, even after that punch in the gut we saw on Sunday night from the DeepSeek AI, which interesting development now. Now we're starting to hear more that DeepSeek may have plagiarized a little bit from OpenAI. That is a topic for a different conversation. Let's now dive into the charts, though. Tick charts, right? Tick charts here on the Nasdaq. Once again, all the time frames, upper left-hand corner. Do you see that big strong move right there? Look at that strong move right there, right? That strong move, unfinished business. Okay, write this down. Anytime we see a strong trend, right, a pullback and a retest, right? Pull back and a retest. Anytime we see a strong move in one direction, expect a deep pullback and a retest. That is unfinished business. Now, one key difference between the S&P and the Nasdaq, right? And you'll notice the Nasdaq did have that run down into a trading range, but no. They popped up now into a bullish range. It's a little bit different, but it's kind of the same basic idea, right? It's a bullish move up into a trading range right now. What do ranges do? They love to rotate down, up, down, up. You'll notice here I measure the amount below, I measure the amount above. Okay, right? We call these pendulum swings in our free video classes in our trade room. So the reality is right now is that if we go lower, in all reality, the best trade right now is that run going lower. And again, we talked about 3 different types of bear traps right below that low. Remember, it's that failure, right? 2 tries into that bear trap combination where the moving average plays a big role in that add-on. The way it separates off that, right, off of that moving average, right, is a lot of that failure into trap combination. I mentioned earlier, right, that V bottom, how to trade that as well. So the same stuff we talked about earlier on the S&P can easily be applied right now on the Nasdaq as well. Now, this is a bull range, right? It's a bull range. And look what's happening right now. We've now rotated off of that low. And now we expect this market now is going to want to punch and go higher. Now, obviously, nothing's guaranteed. We had big earnings a few moments ago, so we may wind up rolling lower here, right, overnight. But let's talk about, though, if we go higher, right? If we go higher. Now, we go higher here, there's a couple different things I'm watching for. First things first is we have to remember that area right there is it's an area of resistance. So even though we're very bullish right now, the pendulum swing, right, that pendulum swing, and that big high, remember, this is a pretty significant area of resistance. So let's talk about a breakout going higher. First things first, if we can get through this high here and start seeing some separation off that moving average, the aggressive entry right now is always going to be that bear trap entry, right? Think about that bear trap. We run up, we pull back, we separate off that high. It's off moving average. We get a higher high in price. I want that strong green candle, right? Closing right above that moving average. Now remember, when it comes to range breakouts, the size of the breakout leg is a measuring leg. I can then use that to know where that target is up overhead. If there's one thing you learn about ranges, it's rotation, and the breakout leg is the measuring leg. I'm telling you right now, once you learn this technique, how to use a breakout leg as a measuring leg, I'm telling you, everything makes a lot more sense now. Trust me, when you look at your charts going forward there. Now, why is it important? Well, because if you want more money, get better at holding on to your winners. And that will give you the confidence to leave that runner where it needs to be. Now, the most important thing is that now we stop trading, right? Once we get that breakout going higher, we know where that measured move is. We stop trading. Now we don't buy up here, and we're not going to sell this because it's way too bullish overall to pick that top. Now, most important thing is a breakout pullback. One of the most consistent things I know about trading is that ranges, it's almost a guarantee. It's not an if. It's a when you're going to get that breakout pullback. Now, when I say breakout pullbacks, think about a two-legged pullback, one leg and two leg. Now, obviously, I don't have a crystal ball. I don't know how far this will go. I don't know how deep it'll pull back. What I do know is that's the sequence, right? That is the strategy. One leg below the 21, second leg. Think about a measured move. If we're lucky tomorrow, it'll line up right around those prior highs. What was resistance becomes support. Now, this is where the magic happens because that two-legged pullback on a faster time frame is going to look like a reversal, which is good for us because now, as all the rookies chase this thing lower and rely on indicators to trade for them, we can trap those bears in. 1, 2, rookie bears, right? Professionals are not going to fall for this trap. Professionals are not going to take that bait. When I was a rookie, though, I was trading off a 200 tick chart, right? A 300 tick chart, right? A 500 tick chart, way too fast. On a faster time frame, this will feel like a reversal. Good. Trap the bears in. 1 try, 2 try. Squeeze those stops. Now, where does market want to go now? It wants to go back and take out that high. Before we get there, how do we add to our winners? You know this by now, right? Repeat it over and over again. Failure into trap combination. Once you learn this sequence, memorize this sequence. Again, it's a range, right? It's a breakout, separation off the moving average, measured move, target, measured move, two-legged pullback, bear trap failure, bear trap technical, retest the high, screenshot this, memorize this. This sequence happens over and over and over again. That is one type of breakout pullback we see repeatedly in our trade room. Lots of ways to trade it. Aggressively, the trap going up, a little more cautiously, two-legged pullback, back to retest the high. Now, one more variation of a breakout pullback. Oftentimes, this thing slingshots off that low and it begins to grind and grind and grind. These are not as common, but they're very easy once you know how they work. Now, one thing you need to learn about price action trading is that anytime a market grinds in one direction, it creates a steamroller. It's very difficult to stop a grinding market. See for yourself. Go back and look at charts. Anytime we pop and separate off that moving average and slowly grind higher, it just anchors everything higher. Now, you know to trade these, right? Mark trend line off the highs. bring that trend line off those lows, look left, find one of these prior swings. I'm telling you, this is almost always, this is where the money is made. That first test, offload the channel, and again, right below one of those prior swings. Again, it could be a bear trap like this. Sometimes we don't have a swing to work with, right? Sometimes there is no swing to work with. If there's no swing, what you do is you grab that failure, trap those bears in, squeeze those stops, failure into pullback combination. And again, if you're here for the first time right now, this might be a brand new language, but again, take that free video course. It'll make this a whole lot easier. Now, very important, very important. We mentioned earlier, the breakout leg is the measuring leg. When you have a pop and grind scenario, the pop leg is the measuring leg. Okay, makes sense? The pop leg is the measuring leg. Then once we know how deep the pullback is, then we know how big the measured move is. It's a very small adjustment, but I think it makes sense, right? The breakout leg is always the measuring leg. In this case, it's that pop leg up. It pops and grinds, right? Measure the pop leg. That's the measured move, or that's the measuring leg. Then once we know how deep the pullback is, again, you want to make more money, right? Let those winners run. And by knowing how these measured move techniques work, it gives you, at least for us in the trade room, our trade room, it gives a lot more confidence. All right. Okay. That's another variation of a breakout pullback, that pop and grind breakout. Now, one more. Okay. One more here. We got time for it. Now, one more. Okay. Oftentimes, and in all reality, the best times will pop up and go into a new trading range. Now, I know you guys love this pattern because I get so many emails and comments every week about these. So if we pop up into a new trading range, okay, very, very important. The new range is a new magnet. The previous range is the breakout pullback. Now think about this. How do ranges work? They rotate. So now breakout pullback, rotation off of that low, right? Makes sense? These can be some most lucrative trades now because now as it rotates off of that low, it slingshots off that low. These are my favorite trades, these bullish moves into ranges and that bear trap below low. And again, when I say bear trap, think about that rundown. Think about that failure. It's the same entry patterns, right? It's different ways we use them. Same entry techniques, but used in different situations, slightly different, right? Don't reinvent the wheel. Find what works and keep on working it. Trap the bears in once, twice, squeeze those stops, and again, add to that winner with that bear trap. You guys probably sick and tired of me saying that at this point in this video, and leave that runner, right, for that rotation going higher. One last thing you want to keep in mind on these is that if we end up busting higher here into a trading range, oftentimes they throw us a curveball, right? This is where things get a bit more difficult. Sideways range, we go higher first. Right? Now, what's going to happen up here? Well, we will either break out and pull back, but usually in these situations, when it pops up into range, right into overhead, which is overhead here, oftentimes it'll pop up, it'll head fake and run back down again. Now, remember, this will feel very, very bearish. Do not fall for this trap. You know what's happening right now, right? It's rotating off the high, down to that low. That is your key area of support. Let all those inexperienced suckers, the ones who haven't learned these lessons yet, let them take the bait and you eat their lunch by running their stop, running back up again, right? These fake out breakouts, these are, I'm not gonna lie, they're pretty fun. They're pretty fun because you can almost feel, the mark going, oh man, they're trapped, and then slingshot right back up again. Anyways, we have quite a bit of fun trading this stuff in our trade room. That is the plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these great markets is to come out and learn with me and trade with me every morning at the opening bell. Again, I'm going to put all the important links you'll need to learn more in the description of the YouTube video. Start first with the free video classes. Enjoy all the trade examples I include in that video series. Then come join me in my trade room and we'll do it all together. In the meantime, guys, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.